In the volatile world of investing, the most powerful weapon isn't a hot stock tip, a flashy prediction, or a viral market trend. It is something far rarer: humility, the ability to admit you don't know what comes next. For nearly 8 decades, one man has quietly honed this mindset, turning uncertainty into opportunity. His name is Howard Marks, and he built a fortune not by chasing glamour, but by embracing the unknown. Legendary investors, including Warren Buffett, say his memos are the first thing I open and read. I always learn something. Marx's story isn't about luck, hype, or following the crowd. It's about discipline, thoughtfulness, and seeing opportunity where others only see risk. And today, we're going to explore the journey of a man who became one of the most respected voices in modern finance, a man who teaches us that in investing, knowing what you don't know can be more valuable than knowing what you think you do. Howard Stanley Marks was born in 1946 in Queens, New York, into a modest, hard-working household. From an early age, he was taught that ambition must be balanced with pragmatism and that understanding risk is as important as chasing reward. These lessons, instilled in him at home, would become the foundation of a lifetime philosophy that would guide him through some of the most turbulent markets in modern history. As a young man, Marks attended the Wharton School of the University of Pennsylvania, studying finance and beginning to understand the inner workings of money, risk, and investment. From there, he went on to earn his MBA at the University of Chicago Booth School, a place renowned for rigorous analytical thinking and a culture that prized intellectual discipline. Even as a young analyst at Citicorp, Marks sought opportunities where others hesitated. High-yield and convertible bonds, once considered risky and avoided by conventional managers, became his early proving ground. It was during these formative years that his investing philosophy began to take shape. Marks recognized that opportunity rarely appears in plain sight. It is hidden where risk is misunderstood, where fear is abundant, and where conventional thinking fails to see potential. He learned that success in investing isn't about predicting the future, it's about preparing for it. By 1995, after decades of refining his approach, Marks co-founded Oaktree Capital Management alongside Bruce Karsh and a small group of partners. From the outset, Oaktree was different. It was not a firm chasing the latest tech craze or the most talked-about equity. It was designed to endure. It was built on discipline, deep research, and a focus on areas of the market where others feared to tread. It was a firm designed to thrive not by luck, but by preparation, patience, and insight. At the heart of Marx's worldview lies a paradox both simple and profound. You cannot predict the future, but you can prepare for it. He repeatedly emphasizes that building a portfolio assuming certainty about economic trends is one of the riskiest mistakes an investor can make. Instead, he teaches that the first priority must always be risk control. Avoiding losses is not a side concern. It is the foundation of long-term investing success. One of Marx's most famous insights encapsulates this idea perfectly. If we avoid the losers, the winners will take care of themselves. This approach flips conventional investing wisdom on its head. While many chase outsized gains, Marx focuses on avoiding errors, on understanding what can go wrong, and positioning oneself to withstand it. He also champions what he calls second-level thinking. While first-level thinking is obvious, what everyone sees, what everyone believes, second-level thinking requires asking deeper questions. It challenges assumptions. It considers what the crowd overlooks. It asks not just what is likely to happen, but what if the obvious is wrong? This mindset allows an investor to act thoughtfully when others panic and remain cautious when the crowd is euphoric. Marx has consistently warned that extremes in market sentiment are dangerous. When optimism swells unchecked, risk is often at its highest. When fear grips the market, opportunity often lurks. Yet, it is not a call to recklessness. Discipline, patience, and sober analysis are essential. Success comes not from bold action alone, but from measured action informed by a deep understanding of risk. One of the defining aspects of Marx's career is his understanding of market cycles. He doesn't ignore them, he observes them, studies them, and positions himself to benefit from them. Over decades, he has navigated crises that humbled entire industries: the dot-com bubble, the global financial crisis, and numerous distressed debt dislocations. When others fled in panic, Marx leaned into opportunity. But his approach was never impulsive. Oaktree Capital's success in distress investing came from rigorous analysis, patience, and precise timing. He understood that crises create both fear and opportunity, and those who can navigate them with discipline can achieve extraordinary results. He has repeatedly reminded investors that market extremes distort reality. Euphoria inflates prices beyond reasonable valuations, and fear depresses them to irrational lows. In one of his memos, Marx drew parallels between the dot-com bubble of 2000 and modern market exuberance, warning that history has a way of repeating itself, especially when investors ignore the lessons of past cycles. Perhaps the clearest expression of Marx's philosophy is his memos. For over 35 years, he has written candid, insightful letters to clients, dissecting risk, analyzing cycles, and sharing what he calls enduring truths. These memos are more than financial commentary. They are continuous conversation, a chronicle of learning, reflection, and humility. Within their pages, Marx consistently returns to the same core themes: risk first, opportunity second. Price matters more than quality. Act when pessimism dominates, and exercise caution when certainty is widespread. He openly acknowledges what he does not know, preparing for multiple possible outcomes rather than betting on a single prediction. In doing so, he demonstrates an uncommon clarity and discipline, one that investors of all levels can learn from. Marx often compares investing to flying a plane. Most of the time, the journey is routine, quiet, and uneventful. Then suddenly, turbulence arrives. Moments of high stakes that demand attention, focus, and skill. Investing, he says, is much the same. Periods of waiting punctuated by critical decisions where the wrong move can be catastrophic. The successful investor is patient, disciplined, and ready. Over decades, Marx has consistently emphasized intellectual humility. The ability to admit you do not know is not weakness, it is strength. It allows investors to avoid overconfidence, to weigh scenarios carefully, and to resist the urge to act unnecessarily. He teaches that action for the sake of action is often the enemy of success. True investing wisdom lies in careful observation, thoughtful analysis, and patient execution. His advice is timeless. Ask how much optimism or pessimism is already reflected in the price of an asset. Consider not only what could go right, but what could go wrong. Prepare for multiple futures. And above all, never underestimate the power of cycles, of markets that swing between greed and fear, exuberance and panic. Marx also emphasizes the importance of price. A good asset bought at too high a price is a poor investment. A mediocre asset bought at a discount can be transformational. The mantra, "It's not what you buy, but what you pay," echoes through every investment decision he has made and through every market crisis he has navigated. Over the course of his career, Marx has not only built a successful firm, but also a lasting legacy. Oaktree Capital Management is respected worldwide for its integrity, rigorous research, and resilience in crises. His memos are read by institutional investors, pension funds, and rival managers alike, influencing countless decisions and shaping the thinking of a generation.